Back in, it's time for Money Tuesday, and we're certainly seeing some uncertainty in the financial markets recently. Gives us several things to think about. Maybe you're concerned about where you should be in terms of interest rates, but also your portfolios, 401k. Should you start making some adjustments? Marshall Clay with the Welch Group joins us now to give us some advice on that. Good to see you this morning, Marshall.
Hey, good to see you, Mike.
We have seen some dips that have been concerning. We have seen some trends that sound concerning in terms of what the Fed may or may not do. Where should people's thoughts be right now in terms of what they're seeing in the markets?
Yeah, I think people should expect a little bit more volatility probably over the next 6 to 12 months. A lot of concern out there with Federal Reserve interest rate policy. You've got supply chain issues, all the circumstances surrounding inflation. But I think it's important for your viewers to really not panic over this stuff and really look to manage their risk. I think if you look at the best investors in the world, they don't view investing as a binary choice of I either need to be all in the market or all out of the market. The real money is made somewhere in between. And so they're constantly sort of shifting their assets around and understanding that, look, even the guys who do this all day, every day, there's always a chance that their best ideas could be wrong. And so they have to play both sides of things. So, they're going to be looking at asset allocation. They're going to be looking at the internal assets that they own within those different asset classes, whether it be stocks, bonds, or real estate. And then the secret sauce in every investor's strategy is the rebalancing piece. And really, rebalancing is just a fancy word for constantly looking for value. So if you have areas of your portfolio that have done really, really well over the last 12 to 18 months, it's okay to maybe look to shaving some profits, but don't make those extreme bets that you hear a lot of people talking about on TV.
All right, but let's talk about people who have 401ks. A lot of people they just put them in there and they don't even look at them. They set a target retirement date and they don't worry about it. Is that a good strategy right now, though, with this volatility you're talking about? Should they go in there and start moving where the percentages of where their money's going in certain investments?
I would definitely recommend that they go in and they look at the particular funds or ETFs that their 401k plan has and make sure that they understand what the assets are inside those particular funds. And I know that can be difficult because there's typically a lot of individual companies in there. But for example, last 12 to 24 months, the technology sector has really driven a lot of the vast majority of the market returns. And so if you're heavily weighted in mutual funds that have a ton of exposure to technology, and in a rising interest rate and inflationary environment, those particular companies may come under a little pressure. So understanding what it is that you own and how those particular companies may respond in various market environments is very important. But so you don't, wake up one day and you open up your 401k statement and all of a sudden it's down a bunch and you're saying, well, how did this occur, right?
Mm-hmm.
I mean, it was doing so well over the last 12 months. So understanding what it is that you own sort of helps you prepare for times like inflation. And I think that's something that is going to be a topic that we're going to talk a lot more about over the next several years. I know you and I have talked about it for the last 12 months, so it's going to be a continuous theme here over the next year or so.
Certainly would not hurt to hire a fiduciary and sort of, they don't charge you much. They basically make money off of you making money. If you make money, they make their fees, and that's probably a pretty good thing for both parties. All right, well, Marshall Clay with the Welch Group, we do appreciate it, and we may have to rejoin you again for some perspective, depending on where things go, okay?
That's right. Always here for you. Thanks, Mike.
All right. Still ahead now, what's behind a looming